In 2024, India has firmly established itself as the world's fastest-growing major economy, with a projected GDP growth rate of 7%, outpacing China's 5%. This isn't just a temporary streak, it's the continuation of a remarkable journey that has catapulted India from the 11th largest economy to the 5th in just over a decade. Today, experts forecast that India could become the third largest economy by 2027, potentially rivaling Japan and Germany. But here's the question. Can this meteoric rise eventually allow India to surpass China, the global manufacturing powerhouse that has dominated the economic stage for decades? To understand this, we must first look at what sets India apart. Unlike China, whose growth relied heavily on exports and industrialization, India's economic engine is powered by something far more resilient: domestic consumption. From the bustling marketplaces of Mumbai to the ever-expanding tech hubs of Bengaluru, India's growth story is rooted in its people. But while the numbers are inspiring, the challenges are real. Unemployment, underinvestment in education, and a manufacturing sector struggling to keep pace with its ambitions. As we dive deeper, we'll explore the historical twists that define these two economies, uncover the hidden strengths driving India's rapid ascent, and confront the obstacles that stand in the way of its global economic dominance. Stick with us as we unravel this fascinating economic rivalry. It's one that could reshape the world in the years to come. Before we move ahead, make sure to like, share, and subscribe to Economy Explorer. And don't skip a second, because you won't want to miss what's next. The divergent starting lines: India versus China. In 1978, a pivotal moment in global economic history unfolded. China, under the leadership of Deng Xiaoping, embarked on a path of transformative economic reforms, opening its markets to foreign investments and embracing industrialization at an unprecedented scale. Meanwhile, India, grappling with its own challenges, remained tethered to a more inward-looking economic model shaped by decades of colonial rule and socialist policies. This divergence set the stage for a tale of two economies, one accelerating into a global manufacturing hub, and the other finding its footing as a democracy juggling diversity and ambition. By 1991, India was facing an economic crisis so dire that it had to pledge its gold reserves to secure foreign loans. This moment of reckoning catalyzed a wave of liberalization reforms, including reducing trade barriers, privatizing industries, and inviting foreign investment. These changes were monumental, but they came 13 years after China's reforms, which had already begun transforming its economy into an export-driven powerhouse. The head start gave China a significant advantage, with its GDP growth surging past India's in the 1990s. China's sprint to the top. China's strategy was simple but effective: build infrastructure, attract foreign investment, and dominate global manufacturing. From 1980 to 2010, China's GDP grew at an average annual rate of 10%, a feat unparalleled in modern history. This growth was fueled by a population ready to work in factories and policies designed to position China as the factory of the world. By the early 2000s, China was exporting everything from electronics to textiles, contributing over 30% of global manufacturing output. During this period, China also invested heavily in education, ensuring a skilled workforce for its growing technology and service sectors. Coupled with massive infrastructure projects like the Three Gorges Dam and an extensive high-speed rail network, China's economic engine seemed unstoppable. But was it sustainable? As we'll explore later, cracks have begun to appear in this export-heavy model. India's resilient rise. India's journey was slower but steadier, driven by its democratic framework and a population that prioritized domestic consumption. While China built factories, India focused on its service sector. By the 2000s, India had become a global hub for IT services, with cities like Bengaluru earning the moniker Silicon Valley of Asia. Unlike China, whose growth was tied to external markets, India's economy relied heavily on internal demand, making it less vulnerable to global trade disruptions. However, India faced its own set of challenges. Bureaucratic red tape, inconsistent infrastructure, and a slower pace of reforms kept its manufacturing sector from achieving its full potential. Yet, India's democratic structure fostered resilience, allowing the country to navigate economic turbulence while maintaining steady growth. The paths of these two economies couldn't be more different, and yet their destinies remain intertwined. What lessons can India learn from China's rapid rise, and where can it carve its own unique path? Stay tuned, because the answers lie in understanding not just their differences, but the opportunities that await both nations. The power of domestic consumption. Step into the vibrant streets of Mumbai or Delhi, and you'll immediately sense the heartbeat of India's economy, its people. Unlike many other Asian economies that lean heavily on exports, India's growth is fueled by domestic consumption, which accounts for 55 to 60% of its GDP. This makes it unique, resilient, and somewhat insulated from global trade disruptions. For instance, while global supply chains faltered during the pandemic, India's economy remained buoyant, propped up by its robust internal demand. This reliance on consumption mirrors the growth trajectories of past economic giants like the United States in the 1960s, where household spending was the engine of prosperity. Could India's domestic market be its golden ticket to surpassing global peers? Let's delve deeper. The dominance of the service sector. When you hear the term global outsourcing hub, chances are India is the first country that comes to mind. From software development to customer support, India's service sector has been a game changer, contributing nearly 48% to the GDP. Over the past few decades, companies worldwide have flocked to Indian cities like Bengaluru, Hyderabad, and Pune, drawn by a highly skilled English-speaking workforce and competitive labor costs. This dominance isn't just about cost efficiency, it's about innovation. Indian IT firms such as Infosys and TCS have moved up the value chain, providing cutting-edge solutions in artificial intelligence, cloud computing, and cybersecurity. With global digital transformation on the rise, India's service sector is poised to grow even further. But as impressive as this is, the question remains: can services alone sustain a population of over 1.4 billion, or does India need to diversify its economic pillars? Digital transformation, a blueprint for the future. Imagine a country where billions of dollars change hands every day, not through banks, but through mobile phones. That's India today, thanks to its revolutionary digital payments platform, the Unified Payments Interface, UPI. In 2022 alone, UPI processed transactions worth over $1 trillion, a staggering third of the country's GDP. This rapid digitization has done more than make life convenient. It has democratized finance, bringing banking services to the fingertips of millions in rural and semi-urban areas. India's digital infrastructure is a marvel in the making, outpacing even developed nations in certain metrics. But it's not just about payments. From telemedicine platforms to e-learning tools, India's digital ecosystem is transforming lives across sectors. With internet penetration increasing and smartphone prices decreasing, the potential for further digital growth seems limitless. But here's the catch. While India has excelled in the digital realm, can it translate this momentum into tangible economic benefits for its vast population? The journey to answer this question will take us to India's most pressing challenges, ones that could either propel or derail its economic ascent. Stay tuned as we uncover these critical aspects. The Unemployment Conundrum. Picture a bustling street filled with young people, energetic, ambitious, and eager to work. Now imagine many of them unable to find jobs. This is the reality for millions of Indians. With an unemployment rate hovering between 7 to 8%, the challenge is not just about creating jobs, but ensuring they match the skills of a growing workforce. Despite India's booming tech sector and expanding industries, the sheer size of its labor pool, over 900 million working-age individuals, creates a bottleneck. The issue isn't limited to numbers, it's about opportunity. While urban hubs like Bengaluru and Mumbai offer lucrative careers, rural areas remain plagued by limited job prospects. The formal employment sector, which includes stable, well-paying jobs, still employs only a fraction of India's workforce. The result? Many resort to informal work, often with meager wages and no security. This imbalance between job creation and population growth looms large over India's economic ambitions. Could a stronger focus on manufacturing provide the answer? Manufacturing, the missing link. For years, India has aspired to become a global manufacturing hub, but the numbers tell a different story. While countries like China built their economies on industrial production, manufacturing's share in India's GDP has stagnated at around 17 to 18%. Even government initiatives like Make in India, launched with much fanfare in 2014, have yet to deliver the transformative results they promised. The challenges are manifold: outdated infrastructure, bureaucratic hurdles, and an over-reliance on imports for critical components. For instance, India's electronics sector still depends heavily on foreign suppliers for chips and hardware, a glaring weakness in an increasingly tech-driven world. However, segments like pharmaceuticals and automotive manufacturing show promise, with export growth in these areas outpacing other industries. But can isolated successes drive the widespread change India needs? Education and skill gaps. If the key to unlocking India's potential lies in its people, then education is the lock that remains stubbornly closed. Despite strides in literacy and higher education, India's investment in education remains at a mere 2.9% of GDP, far below international benchmarks. This underfunding creates a ripple effect, leaving millions of students without access to quality schools, modern teaching methods, or relevant skill development. The consequences are stark. A significant portion of the workforce enters the job market unprepared, lacking the technical and vocational skills that industries demand. While elite institutions like the Indian Institutes of Technology, IITs, produce world-class talent, the gap between the top and the rest is vast. The challenge is clear. Without significant investment in education and skilling, India risks squandering its demographic dividend. Infrastructure, the Achilles heel. Every thriving economy needs a backbone, and for India, that backbone is infrastructure. Although progress has been made, India's road network has expanded, and its airports now rival some of the best in the world. There's still a long way to go. Poor logistics, unreliable power supply, and congested urban spaces continue to hinder productivity and drive up costs. Consider this. Transporting goods across India takes significantly longer than in countries with more advanced infrastructure, reducing the competitiveness of Indian products in global markets. The government's ambitious infrastructure projects, such as high-speed rail networks and renewable energy grids, promise to change this narrative. But with limited funding and bureaucratic delays, the road to transformation is anything but smooth. Could India's digital revolution provide a way to leapfrog these hurdles? The answers to these challenges hold the key to India's economic destiny, and as we move forward, the interplay between ambition and reality will shape the nation's path. The road ahead. India's economic potential. In 1700, India was the world's economic powerhouse, contributing over a quarter of global GDP. Today, as it climbs the global rankings again, one can't help but wonder, could history repeat itself? With a young and dynamic population, rapid urbanization, and a tech-savvy middle class, India seems poised for greatness. But achieving this vision requires more than just ambition. It demands strategic investments, bold reforms, and an unwavering focus on inclusive growth. Demographics are one of India's most significant assets. By 2025, India will surpass China as the most populous country, with a median age of just 28 compared to China's aging workforce. This demographic dividend has the potential to supercharge economic growth, but only if the nation can provide quality education, meaningful jobs, and robust health care for its citizens. Will India harness this youth-driven momentum, or will it stumble under the weight of unmet expectations? The digital revolution is another critical lever for India's future. With platforms like UPI transforming financial inclusion and e-commerce giants expanding into rural areas, the digital economy is reshaping how business is done. Imagine the potential if every corner of India had access to affordable internet, modern infrastructure, and digital literacy. The possibilities are endless, but so are the challenges of scaling this transformation sustainably. Lastly, India must strike a delicate balance between fostering domestic industries and participating in global trade. While protectionist policies can shield local businesses in the short term, long-term growth depends on integrating into global value chains and enhancing competitiveness. The decisions made today will determine whether India becomes a leader or lags behind in the 21st century. As India stands at this crossroads, the choice is clear: bold action or missed opportunity. The world is watching, and so are we. Thank you for joining us on this exploration of India's economic journey. If you enjoyed this video, please like, share, and subscribe to Economy Explorer. Don't forget to check out one of the suggested videos on the screen, and thank you for being part of our growing community.